The Better Outcomes segment today being brought to you by mycdlp.com, mycdlp.com. Hey, if you've got a going through a divorce, or if you're helping clients go through divorce, the mydymworkbook.com, great tool to put all real property into. Send it back to us and we'll send you a free evaluation. Totally free. All you got to do is just fill it out, send it to us. The value of an equity buyout, pre-approval in a changing mortgage environment. With mortgage rates on 30-year fixed rate loans rising over 6%, the cost of mortgages is significantly higher, making it more difficult for divorcing homeowners to refinance their marital home or buy a new one. Divorcing homeowners who are now faced with refinancing their current mortgage most likely have a current interest rate at or below 4%. However, due to recent increases, they're looking at interest rates in the 7% range. In a normal situation, nobody wants to refinance from a great rate to a higher one. On the other hand, divorced homeowners may have little choice but to refinance to retain the marital home or buy a new home post-divorce. What is the real impact of rising rates, and how is it affecting affordability post-divorce? Qualifying for a new mortgage may be more complex, and an equity buyout pre-approval should be a top priority. Obtaining mortgage pre-approval to purchase a new home has been common practice for many years. A pre-approval shows the home seller that the buyer has the financial strength to obtain mortgage financing to complete the purchase transaction successfully. The mortgage purchase pre-approval is one of the first steps for home buyers, and it should be one of the first steps for a divorcing spouse before agreeing to refinance the marital home. Equity buyout pre-approval should also be required by the spouse retaining the marital home if new mortgage financing is required. For example, a refinance incident to divorce is required to remove the vacating spouse from the current mortgage, or when the in-spouse needs to buy the equity ownership from the out-spouse in cash form. 1. An equity buyout pre-approval allows the certified divorce lending professional, CDLP, to account for all income requirements, joint and individual debt, and assets needed to provide mortgage financing successfully. Number 2, an equity buyout pre-approval can eliminate the fear of selling the home should mortgage financing not be obtainable by the in-spouse if ordered in the divorce settlement agreement. An equity buyout pre-approval can prevent the need to return to litigation due to the inability to fulfill the requirements of the divorce settlement agreement. Number 4, an equity buyout pre-approval will provide all parties with confidence that there will be no issues in obtaining mortgage financing once the divorce is final and alleviate any concerns of failure to execute. What's the difference between a pre-qualification and a pre-approval? Pre-qualification generally means that a mortgage professional collects basic financing information from the borrower to estimate how much of a mortgage they can afford. A pre-approval takes it one step further by verifying the financial information you submit to get a more accurate amount. This means that an equity buyout pre-approval is a more vital sign of what the borrowing spouse can afford and adds more credibility to the lending strength of the borrower. Divorcing homeowners who obtain an equity buyout pre-approval prior to the change in interest rates are advised to obtain an updated pre-approval, ensuring their ability to qualify for mortgage financing has not changed. The CDLP brings tremendous value to the divorce team during the settlement process because of their stronger perspective of the entire divorce process. In addition, their understanding of the intersection of family law, tax law, real estate, and mortgage financing truly separates them from other mortgage professionals in the industry. A successful divorce settlement is a result of putting the pieces of the puzzle together so that both divorcing spouses come out of the divorce whole. Therefore, each member of the professional divorce team should bring value and perspective that benefits the overall outcome and success. Give us a call today for a copy of the Divorcing Your Mortgage Homeowner Workbook. You can get a copy at mydymworkbook.com, mydymworkbook.com, a guide to credit, real estate, and mortgage financing after divorce. This workbook will help you organize, be prepared, and understand your mortgage financing position, whether you need to refinance the marital home in an equity buyout situation, or prepare to sell and purchase a new home post-divorce. As a mortgage planner and a CDLP, I help divorcing homeowners make a more informed decision regarding their home equity solutions while helping the professional divorce team identify any potential conflicts between the divorce settlement, home equity solutions, and real property issues. Involving a CDLP early in the divorce settlement process can help the divorcing homeowners set the stage for successful mortgage financing. As always, I remind you, we are not giving any legal advice, tax advice. You need to talk to lawyers and tax professionals for that. And we're not making any offer to sell or lease or finance. Again, we got to do that on an individualized basis. That is the Better Outcome segment brought to you by mycdlp.com, mycdlp.com.